If you ever wanted to buy a home, but you didn't think that you could qualify for a mortgage because of your credit, you're in luck because huge changes are coming on how you can get approved. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit. Start now by subscribing so you don't miss out on any future videos. In late October, the Federal Housing Finance Agency, or the FHFA for short, announced that it would begin requiring mortgage lenders to incorporate credit scores from VantageScore, which is called the VantageScore 4.0. When looking at potential mortgage borrowers. Lending companies will also need to move towards a new version of the FICO credit score called a FICO 10T, which is the first major change that will be happening in nearly 2 decades. Now, both of these credit scoring models are very similar, so let's break down each one of them so you know what to expect. Now, I got this chart from Credit Karma, so let's go over it. So based on this data, it says that what is very important is your utilization rate, which is essentially how much debt that you have and your credit card balances. They will also take a look at your historical utilization rate and payment information, essentially which is your trend data. Your collections accounts are viewed differently as well. This ignore paid collections accounts, medical collections that are less than 6 months old, and the way unpaid medical collections less than other types of collections accounts. In addition, if you have a tax lien or judgment, these will count towards you less, but they will still have a significant impact. Now, with the FICO 10T, the breakdown is very similar to other FICO scoring models, but they take into your account of credit behaviors within the past 2 years. This will include things such as whether or not you carried a balance from month to month, consolidate any debts, so the lender will just have more of an insight of how you handle your finances. Next, you might be wondering who the FHFA actually is and how they have the power to do this. The FHFA is an independent federal US agency that was founded in 2008 with the mission to give access to long-term, affordable housing opportunities to Americans in a safe and sustainable system. They help regulate Fannie Mae and Fannie Mac loans, as well as work with other US government agencies to continue to update market rules and regulation in the quest to achieve this mission. So, what did this actually do for you? Well, lending companies traditionally use mainly your credit history as the biggest indicator of your overall worthiness of when it comes to securing a mortgage. Even though they do look at some other factors such as your cash on hand, bank statements, and pay stubs from your job, many other things were left off the list of items that could be looked at. Not only that, but since many younger people in their 20s and early 30s are still building their credit, using mainly your credit history does not necessarily tell the full story of someone's financial background. A person in their late 20s might not have the best credit history due to the mistakes made when they were years younger, but could now be much more financially responsible in the current day and still get overlooked for a mortgage because of those mistakes made years ago. As a borrower, having both your VantageScore and the new FICO score will also include a lot more information about the borrower that wasn't normally used in the past that will help millions of Americans increase their odds of getting approved for a mortgage. Things like the borrower's renting history, utility payments, and even their monthly phone payments can now be used by lending companies to help determine if potential borrowers can qualify for a mortgage or not. This is a huge step in helping many people secure their first mortgage, especially if their credit history does not look as good as they may like. Now, if you guys are looking to get utilities reported to your credit report, I would recommend Experian Boost. This is 100% free, but it only benefits Experian. There are also other paid services such as BoomPay that allows you to report rental payments to the credit bureaus for a small fee. Or you can just get a credit card like Bilt, which allows you to pay rent with your credit card without any fees, plus they will report this information to the credit bureaus free of charge. All of those links will be down in the description if you guys like to check it out. Because so much more will need to be considered now by lending companies, more people who might not have been eligible for a mortgage in the past will now be considered just as long as those new things work in their favor. This is huge if you are looking to potentially buy a home in the future. And since so many younger people are looking to jump on a home if housing prices go down, this will only help you achieve that goal. The reason why this helps so many more people is because it should help lenders manage their own risks while expanding access to credit for potential borrowers who don't have the best credit histories. Historically, lending companies have relied mainly on potential borrowers' credit history without taking any other factors into consideration. With the new changes, many more things beyond just your credit will now be looked at. So if your credit has never been too hot, but you have been paying your other bills on time that don't affect your credit, then this new change can really help your chances of getting approved for a mortgage when you begin to get serious about buying a home. The FHFA also updated these guidelines for loans that can be used through Fannie Mae and Fannie Mac, which are two government-backed entities that support the larger mortgage market in the United States. If you are unfamiliar with these names, Fannie Mae and Freddie Mac support mortgage lenders by buying loans from private lending companies, and they are generally known for helping the US mortgage market running smoothly. Both companies, they buy mortgages from different lenders, which keep a steady source of mortgage funding available for individuals and investors alike. So you might be asking yourself, what requirements are still going to be expected with these new changes? Well, the FHFA currently expects the requirement for these loans to include things such as a maximum loan size of around $650,000 for most areas in the US. There's also going to be a minimum borrower credit score of 620, so there's still going to be some credit requirements for potential borrowers. The reason that these are some of the current requirements is because they already fall in line with the existing criteria for private lending companies. Lenders won't normally make loans that fall outside of these parameters because they can't sell them to most individuals who are looking to secure a mortgage, which makes a riskier investment for the company itself. The FHFA hopes that the addition of these new credit scores will allow for more people to qualify, since more things now can be reviewed and considered by lending companies. Even though some of these changes are exciting, it still hasn't been stated of when these changes will officially be put into effect. The FHFA did not set a deadline for the new policies to be implemented, describing it as a multi-year effort, so don't expect all the answers and criteria to be laid out just yet. So you might be wondering who's actually going to be benefiting from these credit score changes. The short answer, millions of Americans. Over 20 years ago, the FICO score became a huge piece in mortgage underwriting back in the 1990s. It was able to bring much more efficiency and cost savings for people and companies alike. And it was also proven to be a better predictor of on-time payments from borrowers compared to other metrics that were being used at the time. This is why FICO has been the standard for lending companies for so long. Without the use of credit scoring, loans that were going through underwriting would be a much longer process. With this being said, FICO and other credit scores miss some great indicators that could help identify good borrowers. Things like on-time rent and utility payments were often left out of underwriting unless it was added in manually. And it was pretty rare since most underwriters was looking to go as quickly and efficiently as possible, and having to add in things manually just slowed down the process. Some of these key factors were often left out, and many families who had a worse credit history were disproportionately affected since they had to rely so much just on their credit histories instead of other good indicators that could more accurately reflect their credit financial situation instead of their past. FICO itself estimates that roughly 53 million Americans don't have enough credit history to rely on if they were to apply for a mortgage under the current lending model. Even though most lending companies don't solely rely on credit scores alone, but this is still by far the biggest factor that lending companies use when it comes to approving applicants for a mortgage. In addition, minority households are even more likely to have no FICO score or to have a score under 620, making it much harder for them to apply and get approved for a mortgage. But with these new changes being added, VantageScore estimates that it can provide credit scores and history for around 37 million people that FICO does not currently monitor. Of the 37 million, VantageScore also estimates around 10.7 million people who have a score of 620 or higher, which will improve millions of Americans' chances of getting approved for a mortgage. In the past, millions of Americans have been deemed unscorable, which means that they were denied a mortgage due to their credit not meeting a criteria for the lending company to approve them. However, with these new updates, millions of Americans across the country will now have a chance to gain access to a mortgage line of credit, since the new standard will take into things account that are more accurately reflect the financial behaviors that truly matter. Countless families have been overlooked by the mortgage industry and practically been invisible despite years of good financial behavior. And now these people will have access to a generational wealth building opportunity in home ownership that we have never seen in the past. If you are one of these Americans, then your dream of owning a home just got a much higher chance of becoming reality, since the VantageScore takes into consideration so much more factors. If you guys want to hang out with me some more and learn more about personal finance and credit, come check out these videos over here.